My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop. All right, guys, welcome back. EYL, the re-up edition.
Yeah.
Re-up pack.
Yeah.
If you haven't been under the rock for the last 15 months, you understand what this is about. This is going to be a legendary situation. So around almost 13 months ago, I believe, we did episode 44 of Earn Your Leisure with Leon Howard.
Big trap. The biggest trapper.
the biggest, a.k.a. Wallstreet Trapper, a.k.a. Big Trap.
You did.
You heard me.
It's coin. It's coin. It's already coin.
And, that episode just changed everything, man. If it's your first time ever watching Earn Your Leisure, you might not be familiar with us or our brother Wallstreet Trapper. You know that he just is a dynamic force that's literally changing not only the culture, but the world as far as teaching stocks and teaching investing in a way that I've never seen anybody actually be able to relate, common, language, street terms, and break it down into very sophisticated business and stocks and investing language. And it started a whole movement, and it's thousands, hundreds of thousands of people that are loyal trappers worldwide.
Shout out to the trappers, man.
That's a fact. That's a fact.
That's how original it is, man. I haven't seen anybody even try to duplicate it. It's so unique to you. You know what I mean? So kudos to you for that, bro.
Yeah,
appreciate that.
When the bro reached out and he was like, I think it's time, man, for round two. And
re-up.
Like, man, listen, let's do it, man. Let's break the internet again. And but he was like, this time I got a little different twist I want to put on it. So I'm like, all right, what's up? Like, talk to me. So he's like, the first time, and if you haven't watched episode 44, you need to do that. You're doing yourself a tremendous disservice. But the first time he was like, we talked about investing. We talked about stocks. We talked about, a lot of different things, like pretty much like a 101.
Yeah.
But, where we at now is a pivotal moment, not only in just world history, but for our culture. Like this is a pendulum shift where you can actually make some real changes and change your generation for years to come. So he was like, it's bigger than just telling people what stocks to invest in. Like we got an opportunity to actually change generations. So I'm like, what you talking about? He's like, I want to do something where it's like I'm laying out a blueprint for not only yourself, for your family and your children and your children's children. And that led to a series of conversations, which led to, us actually collaborating. And we're going to talk about that. Ooh. But, we got to... What my man MG the mortgage guy always say, collaboration is better than competition.
That's
you know
a
what
fact.
I'm saying? So we actually,
we're not leaving this up to the DuPonts and Carnegies.
Even bigger than just a show, like we put together something just on our own, as entrepreneurs just coming together. That's just going, really change everything. But we definitely had to do a show. I'm like, bro, we need to do a show like to really like get his game out here, man. So that's what we here for right now. We're going to give $1 billion worth of game, 100 years worth of game for investing, for, how to really get up on investing, how to change your future of your family, how to dissect businesses, all that stuff. Yeah. So strap your seatbelts in, first and foremost.
Get your Pyrex dish.
Get your Pyrex dish ready, man. And most importantly, trapper attire
is required.
Turn on the stove. So, first and foremost, man, welcome back, my brother.
Man, I'm glad to be back, man. Shout out my brothers, man. Troy, Rashad, man. It's nothing but love. Whole Earn Your Leisure family, man. Just appreciate y'all letting me come back. Anytime we put something together, it seems like we shift the culture every time.
Yeah, man.
You know what I'm saying? I know we just did a live like the other day. You know what I'm saying? And I think that was great, that live we did. That was impromptu.
Yeah.
You know what I'm saying? 10:30 at night, we got 1,500 people on a live, and we just having a conversation similar to what we always have. And it's crazy for that because it was like us allowing people to hear a conversation that we always have. You know what I'm saying? And I think that's just monumental, man. Every time we get to talk, and I think it's a great balance for people. Because for me, I think I always say it's more of us than it is them. And what I mean by that is more people trying to figure it out. You know what I'm saying? It's more people trying to understand, how can I get in a better situation? What do I have to do to improve? Like, I see people living and I'm tired of struggling. It's way more us than it is the ones who figured it out. So for me, I feel like I always got to be in the trenches. I always got to be with the people who trying to figure it out, even if I got to do it one by one. You know what I'm saying? So for them to hear that and for me to be with you all, like, I love this platform because like I told y'all the first time, man, like, y'all doing something amazing. You know what I'm saying? And it's showing 13 months later, man, y'all almost 400,000 people on the gram with YouTube. Y'all almost got 1 million people, bro.
It's big.
Not even counting what people doing in audio. You know what y'all doing with audio? I can easily say y'all touch 1 million people every time y'all post something, bro. And it's not on no laughing stuff. It's not on no, just nothing cornballish and nothing, nothing against that, bro. Yeah. But it's straight giving people what they need. It's straight. I know it happened to me. Every time y'all see somebody, I can guarantee this, it ain't a day that y'all leave out y'all hood, somebody tell y'all, bro, y'all changing my life. You know what I'm saying? And for me, that mean a lot because I know what I injected to the culture in my past. So for me to be able to now say I can change a family with teaching them how to invest, teaching them about financial literacy, teaching them about the things I've learned, and I can bring it to y'all platform, man, I think that's amazing, man.
Yeah. This is one of those moments. Like I said, the last time you came here was a classic. This time around, the scenery has changed a little bit, but I feel like it was a story getting to know who Wallstreet Trapper was, and then you gave out knowledge. And I think the re-up now is like, here come the execution. Now we gonna put you on play to really bridge the gap on like what you need to do now that you've got the information.
Yeah, and before we start, I gotta thank you also because we just came from Dykeman. You was with us. Trap was with us this whole week, and we was working out together. We was doing everything together, and we had an amazing community give back. Over 400 turkeys was given away. $10,000 in cash. Gift cards was given away. TV, trip to Disneyland, iPad. It was just so much stuff, man. So shout out to Dykeman Basketball Tournament. Shout out to Pete Law. And shout out to MG the Mortgage Guy. Shout out to Jamal. Shout out to my sister. Shout out to everybody that just came. Shout out to Danielle.
Yep.
And you was there, man. And the people came.
They breezed past me. They breezed past me. They like, yo, excuse me. Is that Wallstreet Trapper?
Yeah, man.
Now, New York show me love, man. Like, when I look at my analytics, like, New York is the #1. And I know it's two things. Of course, I'm putting in work, but I know I rock with y'all so hard. Y'all always, it's literally not a podcast or a live that I've seen you all do where y'all don't say, shout out my bro Wallstreet Trapper. I've seen y'all go on Revolt, and I saw Troy say one thing my brother Wallstreet Trapper always said. So I think, that I feel like New York is like another home, because when I come here, I'm with y'all. Yeah. So for me to be amongst that, it's like, damn, like, they rocking with me in New York too. You know what I'm saying? Like, they showing me love. Like, people telling me, like, go eat here, Trap, go eat there. And, so that was just love for me. And also, this time around, I felt more comfortable here. And just being in that whole area, that whole Dykeman area, I'm not gonna lie, I was looking around and I was seeing people and I was like, bro, like, in my mind, I just kept saying, we got a lot more work to do. Yeah. I kept saying that. I'm like, Troy, we got a lot more work to do.
Yep.
Shot, we got a lot more work to do because I'm seeing it. You know what I'm saying? And I'm seeing myself again. You know what I'm saying? I'm seeing me moving forward and progress, and I'm seeing why I can't do certain things because I got to go back here. The language in the hood is the same everywhere.
Yep.
The slang just changed. But the language and the thread that's in every hood is the same. Struggle, trying to figure it out. Keep bumping my head against the wall. You know what I'm saying? So for me is, all right, let me show them. I know you won't eat today, but let me show you how to put a meal on the table for generations, man.
Well, that's a fact, man. And that's a perfect segue. Because like Troy said, the first time was like the beginning. Now it's like execution. So let's jump right into it as far as the investment. You're the Wallstreet Trapper. So obviously stock market is your game. Right. So anybody that's been investing, I feel like a lot of people came into stocks around this pandemic and it's been a flush of new investors that started to come into the marketplace. And now they're actually being educated on stock market. They're watching Trapping Tuesdays. They're watching Market Mondays. Shout out to Ian.
Shout out to Ian.
So let me ask you this.
Yeah.
One of the things even I struggle with sometimes is like, how do you know when to sell a stock? Because everybody, a lot of people tell you like this is a good time to buy the stock, right? Like obviously, like if it's 20% off of its high, then you can use that metrics. Or if it's, it's different strategies of how to know when to buy a stock.
All right.
But there's not really too many metrics or strategies that I've seen to know when to sell a stock. So what's your thoughts on that?
So I have a few ways in which I deal with selling the stock, right? So one of the ways is I ask, before I even buy a stock, first I want, put a valuation on it, like what I think the company is worth. So before you get doing anything, you got to put a price tag on it. After you research the business, after you understand what it's worth, because if you don't know what it's worth, you don't know when to sell. You don't know when to buy. So you got to put that price tag on it. And that only comes from doing the fundamental research, right? Understanding the business. And so one of the things I like to tell myself is simple. Once it gets to 100% for me, now it's time for me to think about, do I have another business? Because I don't want to just sell.
100% profit?
Yeah. I don't want to just sell and have the money sitting in my account. I think that's what most people do. Like, so you got to put a tag on it and then put a life expectancy on it. Like, what do I expect it to do in this time frame? And is it up a certain percentage in this time frame? So for me, the goal is already buy and hold 5 years, 10 years, 20 years. Like you have to have a life expectancy of it, how you want it to perform. And then I'm asking myself, well, in this time, if I'm up 100% or more, if I have another stock that I'm willing to invest in, that's why we should always be looking for new businesses. That's why I tell people all the time, like, I don't care what's going on. Every day I'm researching new businesses because the world gonna keep on solving problems. That's what businesses are, man. They solve problems. You know what I'm saying? So the world always is presented with a problem. Somebody's always gonna try to do something better. Like Amazon drop, whatever they drop, boom, Snowflake coming with, they say, I could do it better than Amazon. You feel what I'm saying? So now I'm saying, okay, let me find different businesses that are solving different problems or doing things better than other businesses. Even Jeff Bezos said that. He said there's going to be a time where some businesses are going to come and do better than what I'm doing at what I'm doing, which is why he keeps on spreading the business out. So what I like to do is, again, put the lifetime span on it, whether it's a 5 year, 3 year, 2 year, 1 year, whatever that case may be. If I'm up 100% or more and I found another business that I like, I can take those profits and then put it in another business.
So when you get to 100%, right, are you saying, like, are you taking a portion of the shares or are you completely leaving the position?
Nah, so I want to stay in a position. Right? Because if it's up 100%, to me, that means it's still performing well. Like if the fundamentals are increasing, management is doing a great job, that's cool. I don't want to exit that position. Right? So I can take some of those profits, which means selling some of those shares when people don't know. Like, because I heard people ask me, they're like, if I take profit, does that mean I'm selling some of the shares? Of course you are. Right. You know what I'm saying? So you'll sell some of those shares and you'll put it in a new business. And now you can start another position with those profits, which is ideal. You know what I'm saying? Another way for me to sell is if the business is not performing well. You know what I'm saying? So if I did the research on it, if I've evaluated the business, and also in evaluating the business, when you put a life expectancy on it, or a time span that you want to do it, you being intentional, right? And so you asking yourself, what is the growth rate of this business?
So how would you calculate? Because this is something that even today in Dykeman, somebody came up to me and he was like, I know I should invest in good companies, but how do I even find a good company? Like, do you have to like read newspapers? Like, how do you, like, what's your process to actually know, okay, like you said, you got to constantly find new businesses. Right. How do you constantly find new businesses?
So an easy way for me, I still use the method like I did in prison, man. I just look at all them ticker symbols that's going down the bottom of CNBC. Like that's putting it on training wheels. That's without you having to even do anything. Like you get on CNBC, shout out to the trappers because I told them this and they do it now. Like you get on CNBC and there's a bunch of ticker symbols running across the bottom. Ones that you don't know about that, like, damn, what is that? Write it down. Like, don't be scared to do that. And another thing is also, I just look at what's going on. Everything I'm buying or everything, I'm looking at it saying, who made this? What this is? Who produced this? Who did that? If I'm looking at tech, I want to see like what tech business. Like the other day, I found out that a business, the ticker symbol was RBYL. I was like, oh, this is the people who make Lysol. Like I didn't know who made it, but as I'm reading the papers, I saw that Lysol sales had increased by 70%. The first thing I want to know is who make that, right? Like who make that? Like who make Lysol, right? And I'm gonna find out if it's public or it's private, right? So I think that's the easy part in finding businesses. And then what happens is when you're looking at one business, it's always gonna shoot you to another business. It's always gonna shoot you to its competitor. Like, so that's for me, I always do that. what this business is doing, I want to compare it to something. So now I'm gonna look up such and such peers. So I know the competitor Lysol is Clorox. You know what I'm saying? So that's easy. That's like it's not hard because 60% of the businesses in America are on the stock market.
So now, and part of your fundamentals is that's the first step, right? Look at
Right.
the peers. What else are we doing to make sure that this is a good company? Are we looking at? I know one of the things you love is no debt. But what are some other things that we're looking at when we're trying to figure out? Yep, this is a good company.
Moats.
Ooh.
Moats.
Can I tell you when you said that last time? I always hear when you talk about moats. Well, I mean, we big Game of Thrones fans, so when we talk about moats, it makes me think of like when they was at Castle Black and it was like, yo, they can't get into the castle because the water's always around.
Yeah.
And so like I'm like, oh, that's how I'm gonna think about moats when you say
That's
it.
exactly what
So
it is.
can you talk about moats?
So a moat is what protects a company from its competitors, right? And so there's different kinds of moats, and that's another thing for me too. When I'm looking at a business, I actually told a guy that's at Dykeman today. He explained to me about a business he was looking at, and he was like, they got a moat, and I was like, so what is the moat? And he was like, well, they the only person doing this in their field. And I said, ask yourself this question: are they the only business that's doing it because they have an advantage, like they have a patent on it, or did management find a way to where it will cost another business too much money to try to replicate that, or are they just the first ones to do it and then anybody else can come back and do it? If that's the case, it's not a moat. You know what I'm saying? If I can speed rap, and then if Troy studied me for 3 weeks and then he learned how to speed rap, then he can challenge me now. You feel what I'm saying? But if I can speed rap in a way that he can't get it, I now have set myself apart, right? So a moat, there's different moats that businesses can have.
What is a moat?
So a moat is what protects a business from its competitors, right? It's some type of product or service that this business has that their competitors cannot do. And they cannot do it for multiple reasons. One, it'll cost them too much money to do it, right? So if it's gonna cost you too much money to replicate this, Chipotle or Chipotle, as I would say, you feel me? So they have this amazing moat where they build relationships. Anywhere that they build a store at, they find local farmers within 100-mile radius, and they partner with them. And anything that the farmers need, they're willing to help them for 2 reasons. 1, to make sure the crops are great. And 2, to solidify themselves as the plug. So you grow fresh crops, I'm gonna buy them from you. But here's what you need. And if you need help with any of this, I'm gonna help you. Right? So now what that does is it allows them now, for their competitors to come beat them, you gotta double my price. So now it's going to cut into your profit, which now gets into low operational costs, the cost that it costs the business to operate. You feel what I'm saying? So because Chipotle have done that, now the second moat to that is every day they give you fresh ingredients, right? Because they've partnered with all of the local farmers around that business, right? So every day now they've guaranteed to give you fresh vegetables. That is extremely hard to replicate. It's gonna cost you too much money to replicate this. So at this point, it's not even worth it.
So from what I'm hearing, it's like, yo, if I wanted to make the burrito, right? If I don't have that moat, it's gonna cost me like $16, where it's gonna cost Chipotle like $7.
Something like that, yeah.
So in that sense, and then pricing is a type of a moat?
It's called a pricing moat.
All right. So are there more types of moats?
There's another moat that I really love is called a switching moat.
Okay.
So a switching moat is, so how hard, so example, let's think about this business called, let's just think about Apple. Let's just keep it simple. So most people who have iPhone, they also have MacBook Pros, or they'll have an Apple Watch, or they're in that Apple ecosystem, right? The chances of me switching from Apple to Android or any other type of phone is slim to none, because now I gotta switch all my information off the Apple cloud to somebody else's cloud. That's a switching mode. Or in business, a lot of businesses will do this. So let's say cybersecurity, right? So let's say a business has all of their, I'm using this cybersecurity business to protect all of my brands. it's extremely hard for me to switch from this cybersecurity company to another cybersecurity company because all of my information is stored here. It becomes a hassle. Whereas I can just let's work this out to see what the problem is and fix it. So switching modes are extremely great because nobody likes to switch. People love conveniences. Businesses are the same way. I don't have to go through all, now I gotta shut business down, I gotta lose money, or I gotta open my business now becomes vulnerable to something like cybersecurity is serious, which is why I love cybersecurity. Right. So any brand that it becomes a hassle for another brand, for the business, for its customers or service to leave that brand to go to another brand, that's a switching mode.
What's up, guys? We are happy to announce that we are extending our Black Friday sale to Cyber Monday. 50% off of our annual membership to EYL University, which includes over 70 past webinars, weekly webinars, access to our private Facebook group, access to our movie club, access to our book club, access to bi-weekly real estate calls with MG the Mortgage Guy, and access to monthly financial planning calls with me, and much, much more. So go to EYLUniversity.com right now and enter promo code EYL50 at checkout for 50% off. Let's do it. So let me ask you this, as far as like another thing that we haven't spoke about before, you're real big on like people hear like growth stocks, right? But what does that mean? Like, what is a growth stock? Because for the average person, they're thinking like, I'm only buying a stock so it can grow.
Anything that goes up.
What's the difference? Like, I'm not buying a non-growth stock,
Right.
or a dead stagnant stock. So what's a growth stock?
All right. So this is dope. Like, so a while back, what I did was I had broke down stocks the way I break them down. So I put stocks in 3 different situations. Right? Is young bucks, OG gangsters, and OGs, right? So it's 3 different categories. Okay. So young bucks, I use somebody like Lil Baby, right? So somebody who he has a huge upside, the potential. He just started his career, right? So his upside is extremely good, right? But what comes with that, because he's young, he's still liable to make some mistakes along the way that may jeopardize his career, right? But the upside is amazing. Like, you see it, you see he's a star, right? That's a growth stock, right? That's somebody with a lot of potential. And what happens is growth stocks tend to outperform the market for numerous amount of years. But the thing about them is they are extremely volatile because the company will make mistakes. And a lot of times they aren't necessarily profitable in the beginning, right? So now what happens is the company, you got to ask yourself, risk tolerance comes into play. Like, can I deal with the downsides of this relationship with this stock, right? And so then we have your gangsters, right? So your gangsters is somebody who been around for a minute. They're a little more mature, right? But they'll still you'll see them in the news if something pop up. You know what I'm saying? Like, something can happen, right? And then you have your OGs, and that's like your Johnson and Johnsons. They've been around for, they consistent. They ain't going nowhere. They here. So like somebody like Netflix would kind of be like a gangster. You know what I'm saying? They still kind of volatile, but you still see the upside. They still have growth in them, but any given day you can get up and they down 2%, 3%. You know what I'm saying? Whereas a growth stock, you get up today, it's up, tomorrow's down 10%. You're like, God dang. You know what I'm saying? What happened right here? Oh yeah, they shot a club up, bro. Like, this what happened right here. Like, he tripping here. He on TMZ right now. You know?
So what? So that's a growth stock. What about a value stock?
So a value stock will fall under like your OG stocks.
Okay.
Right? Somebody like Caterpillar, somebody like Johnson and Johnson, Walgreens.
So those are the
right?
OGs.
Yeah, it's OGs. So, but it has a ton of value, right? The value is there, but also value stocks tend to not have growth, and they're trading less than what the market says they should be trading at. You know what I'm saying? So then it will be an undervalued stock. But value stocks are stocks that have consistently performed well, provided value to the marketplace, and we just know what they about, you know what I'm saying? And so it make it easy so people don't get lost in the sauce and confuse them. Think about your OGs, like think about stocks that have been around since you was a kid.
Right, so like a growth stock is something that has tremendous upside, but is also, extremely volatile, like
It can
a
be
young,
volatile.
like a young rapper that's just getting money for the first time.
Yeah, he gonna mess up some things.
And then what's the second one? The gangster.
Yeah,
Gangsters.
gangsters.
That's just like you've been around long enough where you know the ropes, but you still
You
Like
you
a-
still can make a mistake.
like a French Montana.
Frenchie's safe, man. I would say Jeezy.
I was
I was gonna say he's an OG.
so now you gotta ask yourself, like, so Jeezy would, you could consider Jeezy, so he would be like in the middle of, you know, and I don't want to really get into this because like, you know,
Well, you said that. I'm
You know what I'm
like,
saying?
yeah, that sounds like Jeezy.
yeah, but like, so for me, like, I would look at somebody, like when I made the post, that's what it was, like somebody like a Fab or a Jeezy.
Okay.
For me, that's like, yeah, and
Okay,
then
so Jay-Z is the OG.
it's an OG.
where you
man.
he's not even get a parking ticket.
Nah, at this point, like, you know what his career like a Fat Joe or a Jeezy or
Nas.
Nah. Yeah.
Like, that's your OGs. Like, they solid, they strong. You know, if they drop something, you're gonna cop that on the strength because like you remember it's gonna take you back.
Yeah.
You know what I'm saying? And so the gangsters would be like your Jeezy, your Fab, you know what I'm saying, your Kiss. You know what I'm saying? You know what I'm saying?
So we got OGs, we got gangsters,
and you got
we-
young bucks.
Young.
Yeah.
Where you putting Tesla in that?
Oh man. So for me, honestly, it's a young buck. Because even though they've been around, they've now
Volatile.
become established and they're extremely volatile.
Yeah.
Right. And they like Elon running it like Suge Knight, man. I do what I want, I say what I want, man. I don't care if you don't like it or not. I don't even care if the shareholders like what I say or not. Look, this is what we doing. The stock too high. Boop, next day the stock go down. You wake up like, yo, I was up 800%. How I woke up 200, you know what I'm saying? So Tesla is definitely a young buck.
Okay.
You know what I'm saying? But it's one of those young bucks like Lil Baby. Like every time I drop, it's a banger. You know what I'm saying?
We moving operations to
We move-
Texas.
So what about all right, like so some like what's an example of like a good growth stock out there right now? In your opinion?
Tesla was one, but we talked about that already. Right. I'm gonna be real. I like Beyond Meat.
Beyond Meat?
I like Beyond Meat.
Why you like Beyond Meat?
So because one of the things that's good to look at is actually where the world is heading, right? So even though Beyond Meat isn't a healthy move, like let's just be real, a lot of people don't care about their health, bro.
When you say it's not healthy,
Because
it's processed.
It's processed.
Yes.
But for somebody who is saying,
True,
I don't want
true vegans.
yeah, will be
know.
like, nah, I'm not doing that.
Yeah.
You know what I'm saying? But somebody who like, yo, I'm trying to eat better, I don't want to eat meat no more. The first thing they're gonna do, Beyond Meat.
Right.
You know what I'm saying? And then when you look at market share, like it's in the fast food industry. It's partnering with fast foods.
Yeah.
It's partnering with your Trader Joe's. It's partnering with, you know, overseas. It's partnering with your Dunkin' Donuts.
Yeah.
You know what I'm saying? So like he moving, like he out there. It's like mixtape Wheezy. Like I'm everywhere you go, I'm there. I'm dropping a mixtape here.
I like that.
I'm
I like
dropping a
that track.
mixtape there.
I like that.
You
track.
feel me? It's mixtape Wheezy. You know what I'm saying? Like I'm putting it on my back. I'm gonna lead the way. You know what I'm saying? And so you know other people gonna come, but I'm out here. But at the same time, the minute somebody like McDonald's said,
I was
yeah,
going there.
the minute somebody like McDonald's say, no, I'm not bumping that over here.
Yeah, we don't. That's crazy that you said it because in my mind I'm thinking like, I'm happy you said Beyond Meat because I was invested in Beyond Meat. But when you hear somebody like McDonald's, obviously a big real estate play, obviously McDonald's, when they say we don't need the middleman, we're not partnering with like an impossible like Burger King did. What do you think it does to the business of Beyond Meat?
So what I love about them was this. Again, your mixtape Wheezy, right? It's a good song, but I'm better on the hook. Or I'm better in it. So when McDonald's said that, what they said, hold up. Don't forget who you came to for that verse. Don't forget who you came to. And so McDonald's said, okay, you're right. We did partner with them in making the veggie or whatever it's called.
McPlant, they
The
call it.
McPlant. Like we did go to Beyond Meat and get the formula. You know what I'm saying? So again, I'm leading the industry. Like this me. So that to me, that's a great growth stock. I'm not telling people to buy it though, because I got it at like $66.
But it's just an example.
It's just an example of the nature of a growth. Like you can get up any given day and Beyond Meat to be down 10%. But you can also get up any given day and it run for 3 weeks straight. You know what I'm saying?
I've also seen that.
You know what I'm saying? Like, so that's the example of that's a young buck. That's a growth stock.
Let me ask you this: for common people that might be struggling just to have enough money to pay bills, right? What would be your suggestion to kind of what's a good starter way for them to actually start investing? Like, what's your opinion? Because I know, like, you know what I'm saying, a lot of times people that might be a hurdle for them to be like, well, I don't really have enough discretionary income to put money into the stock market. What's your thoughts for them?
So let me make sure I understand what you're saying, right? Like, you saying they don't have enough money to invest, or how should they start? I just want to make sure I can answer it correct.
Well, no, like, as far as like if they're struggling to invest, like, what's some like, what would be like? Because for me, I'm looking at like even like a HSA, right? Where people a lot of times might not be familiar with that. Like, that's a way to actually start investing via your health insurance. It's like a backdoor investment way. People don't know what a HSA is. It's a health savings account.
Yeah, break that down, bro.
Yeah. So like the health savings account is, so like you have like a high deductible health plan, right? Which is like very popular with young. Like, I have a high deductible health plan, and it's like usually when you don't go to the doctor a lot, your premium, like, why would you pay for the regular health plan like a HMO or a PPO when you can get a high deductible health plan? But the thing with the high deductible health plan is that it's a higher deductible.
Okay.
Right? So it's like, let's say you got the PPO, the premium might be like, let's say $400 a month. But with the high deductible plan, it's $200 a month.
Okay.
But your deductible is a lot higher. Your deductible might be 2 times higher than the PPO. So if you go too many times, you get caught out there.
Right.
And you got to pay more money out of pocket. So it's a calculated risk. But the reason why I'm mentioning is that a lot of young people and a lot of people where every dollar is count, they might either they don't go to the doctor that much, or they're just making financial decisions where it's like, you know what, I really can't afford the PPO, so I'm gonna do the high deductible or whatever. So one of the good things with the high deductible plan is that it allows you with the health savings account. So with the health savings account, it's pretty much like a savings that you're putting money into to pay for that deductible or any out-of-pocket expenses that you may have, right? But the good thing is that the money comes up out of your paycheck before you actually get paid. It's like the 401k.
Okay.
You know what I'm saying? So it actually lowers your taxable income, because it's the thing with the 401k is that when you put money into a 401k, it's what's called pre-tax dollars. You know that. So it's like if you're making $100,000, you put $10,000 in, now you're taxed on $90,000 because it lowers your taxable income by $10,000. So now with the HSA, like the most you can put in is $3,500, $3,550 for a single person and $7,100 for a family. Like, let's say you put $3,000 into the HSA. So now that you're making, $60,000. So now it lowers your taxable income. So you're not paying any taxes on it, right? But the cool thing about it is that it can actually be invested, like how a 401k is. So you can put it in like different type of like investments, stock market investments, mutual funds, stuff like that. And now the money grows. So now let's say you put like $3,000 in for 1 year, right? But you got to go to the eye doctor and you got to get glasses or whatever, any type of medical expense. Instead of not having money to pay for it, you've been saving and you just use your HSA. And they give you like a debit card and all that. But if you don't go to the doctor, because it's a calculated risk, right? That's the whole point of having a high deductible plan. You're not going to the doctor. So if you don't go to the doctor, what happens is that money rolls over into the next year. So now next year you start with $3,000, right? So what happens is that the money grows, and it's kind of similar to an IRA, because at the age 65, you can actually take that money out without paying a penalty. If you take it out before, you get a penalty. Okay. But now at 65, you can take the money out. You just pay state and federal tax. You don't pay a 10% penalty or 20% penalty for taking the money out early. So that's kind of like a backdoor way, like for me, in my opinion, where it's like, I got to save money for my health insurance. So if my budget was, let's say, $400 a month, right? I'd rather do the high deductible plan, put $200 towards the premium, $200 towards the HSA. If I got to use it for the, I'm going to use it anyway. But if not, now that's going to be like an investment. You know what I'm saying? And a couple $1,000s over the course of time adds up. You might have $200,000 in 30 years.
I'm from the world where it was like, yo, if you didn't use your benefits this year, it don't roll over to next year. It's like, yo, you better use it by the 11th of November or it's gone.
Well, the thing about it is there's so many different things as far as like, even with the 401k, people don't know that you got a raw 401k option. You might have that. Like, and it's like, you don't even know a lot of times what's offered at your job. Right. And this is why education is so important. Like, you know what I'm saying? It's like, little stuff like that might change the direction of your future.
1,000%, bro.
Like, you know what I'm saying?
You get that email like in this world, yeah, you're not familiar with this. It's been a while, right? So in this world, like they give you an email like, yo, this financial advisor is coming on December 15th if you want to schedule an appointment. And it'll be some like dude with bald headed with glasses and he talking to you and you're like, yo, what is he talking about? You know what I'm saying? But like this type of information, it's like, yo, but people just knew it.
Yeah.
Man.
But so like for you, like I want you to really hammer it home. Like even you could save even $100 a month, right? Like even $50 a month.
I got you.
Yeah.
So let me say this first, man. I say this on Trapping Tuesday all the time. And I don't know if people be thinking I be dead serious, yo. Listen, I'm not a fiduciary or a financial advisor. Know that everything I say is for entertainment purposes only.
Well, you can take them.
If you can't mitigate the risk, you must seek out financial advisory. I'm not one, but I know one by the name of Rashad, part of the Earn Your Leisure podcast. He can take you to glory.
Where you taking him?
I can just take you to the
That's all
trap
he plays.
house.
That's it.
Listen, this dude is so smart, man. They sleep on. I say that every Tuesday, man, and people be laughing, but this dude is brilliant, man. You right? He just broke that down. He had me like, man, I just got Blue Cross Blue Shield. I should have did this. I'm happy. I should have called this guy first. You did.
That's when you think you know.
Just when you think you know, then he come with I got an idea. You know what I'm saying? But that's real talk, man. So one of the things I like to do is tell people to try to save 10% whatever they make. Right? Whatever you make. If you get $100 a week, save 10%. If you get $100 every 2 weeks, save 10%. And so the easiest way to get in the market, because we understand that the stock market does for you way more than putting your money in the bank could do for you. Right? We already understand. We all have beat that drum forever. Right? And so one of the things you can do is get into index funds or ETFs. Right? And the reason being is because, so let's say you're not comfortable enough to say, let me buy a Tesla. I don't have enough to buy a Tesla right now. I ain't my risk tolerance is not there yet to see Beyond Meat go down 5-10% and still be there. Right. And most people don't even understand, and it's not because they don't know it, because they just haven't been exposed to it yet. They don't know that if the stock you bought it at $30 and it goes down to 28, most people in their mind, I lost some money.
Yeah.
You know what I'm saying? And that's not the case. Yeah. So one of the best things I would say for people to do is buy index funds like ETFs when you first got in the game. ETFs, for me, ETFs better than index funds. You know what I'm saying? And it's simply because now you can get exposure to a specific industry. Right, and I know in episode 44, the classic, right? We broke something down, but in the re-up, we gonna reiterate it, right? So it's an ETF is simple where, let's say I wanted to buy some marijuana stocks, right? But I know that's kind of a volatile industry. It's full of young bucks. You know what I'm saying? It's full of young bucks. So what happens is you can buy the marijuana ETF, and now depending on which one you buy, whether it's YOLO, whether it's MJ, you know what I'm saying? Now you have 15, 20 marijuana stocks at one time, right? And now if one or two of them down or three of them down, the whole industry, that whole ETF might go down 50 cents, right? Whereas if you in that one stock that went down, any given morning you wake up and you down $8. You know what I'm saying? So, and also with index funds and ETFs, I'm not a fan of dollar cost averaging because that allows me to buy stocks overpriced over time. But with index funds and ETFs that are $50, $60, you can buy into those every time.
And dollar cost averaging for anybody is when you put money in every single month or every single it's a period of time, every week or whatever.
Yeah,
you appreciate it.
So you buying Apple, you will buy no matter what the price is.
Every first of the month.
You buying Apple no matter what the price is, you buying it just to stay in. Right. And so for me, I'm not a dollar cost averaging person. I'm an averaging down type of person. Right. And averaging down is saying I found it. I bought it at $15. I don't care if it run all the way up. Right now, what I do is every half a year or every 2 quarters, I reevaluate every stock I'm invested in. Right. To understand what the value is at. So now if the stock price dips, I'm not buying it, but it dips at a below value price, I can buy it, right? So example, I bought Amazon in 2018 at $1,900. I bought it in October. November, December 18, the market went into a correction. You know what I'm saying? And it went from 19 to 17, 1,900 to 1,700. I bought it at $1,700. Now what that does is that brings my $1,900 buy-in price down to about $1,825.
Yep.
Right. So now I don't gotta wait till it get to 19 to see profit. I can start seeing profit again at $1,875. Right. And so then it went from 18 to 16. I bought 2 more shares at 16. So now instead of me seeing profit at $1,875, I can probably see profit now at like $1,780 or something like that. Right. And then it went down from 17 to 15, I missed it and I got it again at 13. So now instead of me seeing profit at 19, I now got profits at 1,600. When I bought it at 1343, it brought my cost basis all the way down to like 1675. You feel what I'm saying? So I'm with buying at discount over a period of time. I'm okay with that. And I told Smalls that I was like, yo, I don't like green markets. I like blood. I like blood. You know what I'm saying? Because that means I can get stuff at a discount. But back to what we were saying, so with individual stocks, I'm a dollar cost average. But with index funds and ETFs, it's a great way for you to
get in with a lower amount
every time.
Because there's not the same requirement that you have to put in. It's not the same
requirement. So now I can get in, like you can get, I think one is the one besides the ETF, another one is there's like a high dividend ETF, right? Where it's like $42, right? And you can get in it every month. You know what I'm saying? You can put, you're saving 10% of your money every week. So that means once a month, you can be able to get this index fund and it's this ETF. And one of the things you can do is you can just say great dividend ETFs to invest in.
Yeah.
Right. And then the ETF itself they've now done the homework for you. They've put the best dividend ETFs in that ETF. I mean, the best dividend stocks in that ETF. So now you don't have to, let me research this, let me research that. You just look at the performance. How has it performed over the last year, 5 years? And you say, okay, cool. Every month, I'm going to just put $50 in here, right? $100 in here. And you can just keep doing that. So that's a great way.
When we doing that, are we looking into the expense ratios as well?
Of course. And it's just so in case people don't know what the expense ratio is, that's just simply how much you're paying someone to run this. Right. And it's extremely cheap. Like it's cheap. Like for me, when I'm looking at expense ratios, I want it to be less than 1, right? So it's less than 1. So I'm paying them less than 1%. And so with these ETFs, a lot of times you can get them at 0.75%, 0.65%, 0.50 cents. That's something like for every $1,000, you pay them $5. You know, I
think that's something like people don't even realize, right? Like you're actually paying that.
Yeah.
You know what I'm saying? It's like kind of a hidden thing.
And you're not gonna feel it.
Yeah.
Because what's gonna happen is it's called passive investing. Mm-hmm. So now what happens is once a year, whatever your returns are for the year, they will take $5 out. You're not even gonna see it. You know what I'm saying? Right. So I don't mind if you don't really know too much, and that gives you time to be in the market. One of the things I always say is time in the market is better than timing the market. Mm-hmm. Right?
Say that again. Say that.
You said it like it was a Negro spiritual, bro.
They're waving from the back.
Say that. That's a fact.
I saw it.
That's a fact.
Yeah. So
big trap.
So time in the market. That's a fact. Time in the market is better than timing the market. Right? So just that experience. You know what I'm saying? Being in the market every day, putting your money in those, let's say you buying that ETF every month, you buying it, right? You in the market, right? You letting them do the hard work. You've downsized the risk. Your money is making money for you. So while you're letting that happen, you can be learning how to research. You can be learning what it takes. And you can start with researching the business that inside the ETF. Mm-hmm. You know what I'm saying? You can break that down to dimes. You know what I'm saying? You could break down a bunch of dimes.
Here come the pirates.
You already know. Bring them the pirates. Big trap. You can break down a dime. Like you can take that ETF and now go to Yahoo Finance. Mm-hmm. Right? Simple. Go to Yahoo Finance, put the ETF in the search bar. Now you can go slide over to those hyperlinks. You'll see financials, you'll see summary, you'll see performance, and then you'll see holdings. Right? Holdings is the companies inside of the ETF. Press that holdings, scroll down, because the first thing it's going to tell you is what types of businesses are in the ETF. You'll see basic materials, financials, whatever. You go down and it'll show you now the businesses and the percent of those businesses that are inside the ETF.
Yep.
And so now what happens is you can look at those businesses and start your research there.
Hey, quick question for you though. Like,
to
so
me.
when you see what's inside the holdings, what is the percentage you like, right? So like if I'm looking at like an XLY or something like that, and I see the allocation for a company, what number or percentage do you look like, you know what? I like that number, right? Do I want them to be allocated like 5 to 7, or is it like 8 to 10% of some of like these big time companies?
So they all differentiate. I'm not honestly that part I'm not tripping on.
Yeah.
But I do want to know where the majority of the money is.
Right.
Right. So let's say we'll just use an example. We'll just say an ETF XLB, whatever that is. Right.
Yeah.
We're just gonna throw some because I don't need nobody saying Trap said this. Right. So let's say we're using XLB, right? And let's say 10%, their top 5 holdings is Earn Your Leisure, Wallstreet Trapper, and other businesses, right?
Yeah.
And so let's say now we're looking at the holders and we see, okay, well, 10% of their money is in Earn Your Leisure. 8% of their money is in Wallstreet Trapper.
Right.
So that means now if that was $100, $10 of that is in Earn Your Leisure.
Right.
$8 of that is in Wallstreet Trapper, right? So if it's $100, you break those percentages down like that. What I do like to see is the businesses that they are strong in are solid businesses.
Okay.
You know what I'm saying? If they solid, now if you got a company that's bad, then that's why I like these ETFs, because if a company is not performing, they gonna get them out of there.
Right.
Like, it's just like, a gangster. Like if I got a trap booming and I got some soldiers
You gotta go.
and you ain't performing, I got Trap bringing in this, Rashad bringing in this. Rashad ain't Trap, but Rashad bringing in this. I got them other trappers bringing in this, and you ain't performing, fam, you gotta go. You out of a job. You can't run for me no more. What I need you for? You know what I'm saying? So they're gonna do that, and a lot of them, they do it once a year, or some of them may do it every 2 years. But they're gonna switch them out and put the next runner in there.
Yeah,
I love that.
Yeah, that's important too, because like you can actually see it happen, right?
Yeah.
If you check from a year to year or every 6 months, sometimes
Yeah.
it depends on the ETF. You'll actually see the allocations change,
Yep.
right? So you'll see one go from 4% to 8%. So it's good to know, like, yo, they see growth in that company. They're putting more money into that
Growing up,
company,
100%.
and so the ETF becomes even stronger.
Let me ask you this. One thing that we haven't spoke about on this podcast yet in depth is gold. And that's something that's been popular this year too. 2020, a lot of things have been ringing off in 2020. Gold is something that, people are just hearing about, and they're like, I need to invest in gold. It's going up. What's your thoughts on investing in gold?
So I actually own 2 ounces of gold.
Physical?
Yeah. I got in a safe deposit box. Because even when investing in buying gold, you have to be, storage is key. Like, you're not supposed to have gold just laying around. You know what I'm saying? Like, that's,
You can't put that under the mattress?
I mean, you can, but if I find that you got some gold in there, I'm gonna come holler at you. I don't live like that no more. Big Trap, we different. We different.
You're OG now.
You OG now. But and then you got a miners, if you tell somebody you got that in there,
Yeah.
you know what I'm saying? So gold is an amazing product, man. It's an amazing protection of wealth. Right? It's what you would call insurance to your wealth and a hedge against the dollar. So I actually think that everybody should own gold. One of the greatest things about gold is that brick is broke. You can literally buy it in a kilo. My goal is to buy a kilo of gold. 1,001 grams.
That's a brick, a gold.
It's a brick, baby. It's a brick.
The real brick.
Yeah, it's a kilo. So my goal is to actually buy a kilo of gold.
So where'd you buy gold from? Like,
So you can get it in multiple ways. Now we talking physical gold.
Both. Let's talk about both.
All right. So we can get physical gold from a certified dealer, or we can get it from. We can get online and check for actual gold exchanges and gold securities, meaning like they literally hold gold. JM Bullion is one of them, like one of the best ones out there.
I was just gonna ask you about
Yeah,
that.
JM Bullion is one of the best ones out there. But even when you buy your gold, what you got to look for now is, so you're never going to get 100% gold
Because it's too soft.
Yeah. So now you got to tap into how much of the mixture that's in the gold. You know what I'm saying? So now, we start looking at that, but you also got to pay attention when you buying gold. It's not easy to sell gold. Like if you buy it, it's not easy to sell it back, right? Because now, so there's this thing called like the spot price on the gold, right? And that's what the gold is actually worth. And then you have what the dealer is going to charge you. Again, it's the middleman. Like if I got to go get it and I got to sell it to you, then I want mine. You know what I'm saying? So you ain't going to go get it yourself. You know what I'm saying? So you got to see who's charging you the less. Who taxing you the less, like being on a block. You know what I'm saying? Like Rashad got it for 17, I got it for 17.5, right? So Trap, why you charging me for 17.5? Well, mine better.
You boys paying too much.
Did? If it take too long to rock up, bring it back. You know what I'm saying?
17, you paying too much.
You did? So, you want to pay attention to that as well, but you can, it's definitely, JM Bullion is one of the ones that I personally be like, they're good people. But also you can go to, where people be buying these Rolexes and all that from. Like a lot of these places, if it's a real Rolex that's not the Rolex dealer, they can be certified dealers. And you can literally go to them and be like, yo, I want to buy some gold. And they'll be like, all right, cool, I got you. You know what I'm saying? You can buy pellets of gold, you can buy gold coins. But again, now you're looking at, one of the things you got to ask them is, what is your fee? You know what I'm saying? And then a lot of times you try to sell, again, it's something to hold. You know what I'm saying? So things get real. Like we looked at if you look at usdebtclock.org, you'll see that the dollar loses value every day. The company is this world is dipping $27 trillion in debt and growing, right? So we know that the more money they print, the less it's worth. $1 today ain't worth $1 tomorrow. You know what I'm saying? So that's what the goal is. So as the dollar loses value, the gold actually goes up because people try to find safer places to put their money, especially in volatile markets where, you know what I'm saying, things going crazy and they can't get into bonds because that's usually the alternative, right? If stocks become too risky, then big investors say, well, let me get into bonds so they can get some type of return on their money, right? But if bond interest rates go too low, right now they're like, okay, I don't want to be in bonds. And then what happens when interest rates go low? Gold goes up. Why? Because everybody going to say, let me get the gold. You feel what I'm saying? So now we start understanding that triangle offense like Phil Jackson. Stocks, bonds, gold. But really, gold is like that safe haven. You know what I'm saying? It's the safe house, right? It's going to be there. It's going to perform. But the thing about gold is if the stocks are performing well, then they don't need to be in gold. They can go to stocks and get a great return on their money. When stocks get too risky and bonds don't got a good rate, well, let me go to gold.
Run the gold up.
You know what I'm saying?
So
I feel like I'm trapping right now. I ain't
so
gonna lie.
so that's the physical, but then you can buy it like an ETF. You can buy like gold stock on the stock market, right? How does that work?
So now what happens is you won't buy physical gold on the stock market. You'll buy gold miners, right? And that's a great place to be, because what gold miners are the people who
Mine gold.
mining the gold.
The companies.
The companies, right? So you can buy gold miners, and then a lot of gold miners will actually be copper miners as well. Because in a lot of the gold, that's what they'll mix it with a little bit. You know what I'm saying? So a lot of the gold miners will be copper miners. Some will be silver miners, some will be platinum miners. So now you're just looking at that whole aspect, but you can buy gold miners and you can buy gold ETFs, which can actually be a mixture of miners and like just precious metal, other precious metals that's inside of that. One of them is called ounces, right? Ticker symbol OUNZ. You know what I'm saying? So that's a gold ETF as well.
So when we looking at gold ETFs, right? And I'm thinking to myself, just from a standpoint of like, yo, if people are mining the gold, who's providing the shovels to mine for them? Are we looking?
Come on, you talking my talk, So you think about that. Like one of the things I say is, this how most people got rich during the gold rush was not the people who was digging for gold. It was the people who sold the shovels.
Right.
That's who got rich. So that's a great place to be. You know what I'm saying? So yeah, 100%.
So let me ask you this. As far as last time we was here, we talked about a little bit, we touched on how to save for your kid, what custodial accounts, 529 plans, things of that nature. But I don't think we went over too in depth with the UTMA and the UGMA.
Right.
Can you talk about that a little bit?
Yeah. So what we did was we talked about, just investing for my daughter. And that was like real dope. Because before I actually spoke on that, I never heard nobody talk about it. You know what I'm saying? And so for me, one of the reasons what I did, so I was like, what's the difference between it? Because I wanted to do something for my daughter besides just putting money in a bank account. Like if I'm making my money work for me all the time and I'm saying I'm gonna do this for the long run, then instantly a light went off in my head and was like, if I start my daughter now, she got way more time than me.
Exactly.
I can put a whole bunch of young bucks in her, you know what I'm saying, custodial account and let it run. So you got two types. You got the UGMA and you got the UT, the UGMA and the UPMA. So one of them is a unified gift account, and one of them is a transfer minor account. Right. So one of them, the UT, the UTMA, you can put real estate, you can put gold, you can put art, you can put intellectual properties and stocks and cash over there. The UGMA is a gift, so you can only put stocks or bonds, mutual funds, ETFs, cash. You can't put the real estate and the other stuff in there.
So there's a limitation between the two.
Yeah. But the dope part about both of them is they're not tax deferred, but there's an advantage in having them. Whereas the first, I think it's $1,050 is tax free. Everything from $2,000 on up get taxed at a children's rate, which is 10%. You know what I'm saying? So it's still, now you got to pay the taxes, you know what I'm saying, on it, but it's still cool because, and I think one of the things that our people, our culture have bad, and it's not, we just got to learn it. We scared to pay taxes. The first thing somebody be like, man, I don't want to pay no taxes. When in reality, like paying taxes mean you making money. You know what I'm saying? So now you just got to figure out how to decrease the taxes instead of not pay the taxes. You know what I'm saying? And so one of the ways you want to decrease taxes on the money you making, right? So if you got your child in that UPMA account, right, or that you only paying 10%, no matter what it does, you paying 10%. I'm cool with that. Whereas just regular income account, that's 28%, 23%. Like that's major. So your child now from 0 to 18 or 21, depending on the state they're in, paying 10%, and you changing their life, man, I'll take that.
Yeah, it's powerful. It's powerful. And I think that having a conversation about generational wealth, has to be included in there, because it's like, the first step is investing for yourself. You can't save anybody till you save yourself.
That's a fact.
But after you not even save yourself, after you start investing in yourself, now you have to start to invest in your children.
That's what we plug. That's the plug, the generational wealth.
If you're not doing that, you're selfish. Bane told us that.
Man, that's the plug. Like, I always said, man, like, if I got it out the mud, and I watched my mama get it out the mud, and I watched my grandmother get it out the mud, and I watched everybody around me get it out the mud, why the hell I don't let my child get it out the mud? At some point, I got to say, I won't change this, yo. I got to say, man, it's different. And I feel like we get so caught up in, I'm living my best life, to where we trying to enjoy life so much to where we forget about they got generations that kind of come behind us. You know what I'm saying? So for me, it's a lot of stuff I don't do until I know for sure I've at least secured 2 generations. You know what I'm saying? And that comes with, 1, educating my daughter, because even if I give her $1 million, if I ain't educated on what to do with the $1 million, I've now wasted $1 million. There's a saying that if you took all the wealth in the world and divided it equally, within 10 to 15 years, the wealthy people will be back in charge. Because they know what to do. We get $1 million and we don't know what to do with it. We back into the famous quote I said in the beginning. Lions don't tell the gazelles and the zebras how to get away. Why? Because now I'm taking food out of my mouth. So as long as I don't tell you how to get away, you're going to always come back. But if I tell you how to get away, now you're going to go tell the zebra, look, this is how to get away from the lion. And the zebra going to go tell the giraffe and the gazelle, nobody can, I ain't got no tricks up my sleeve. Whereas if I don't tell nobody and I just keep it amongst my people, then we gonna always eat. So I ain't mad at them for not giving us the game. I ain't around here saying, man, they should teach us this in school. No, what I'm gonna do is I'm gonna get the knowledge, right? I'm gonna seek it. I'm gonna flip every rock. I'm gonna kick in every door, right? And once I get it, I'm gonna go back and regurgitate it to my daughter at the age of 2. What's a stock? What's an asset? What's a liability? Does it make you money? You know, what's real estate? At an early age, I'm having this conversation. So now I'm teaching her a word a day. Like she's not still when I said that then. Like a word, I'm teaching her 2-3 words a day about just financial literacy. Like the school can do what the school's supposed to do. We gonna do some of that homework too. But this financial literacy, this was gonna save you. You know what I'm saying? Let me show you, this was gonna save you, family. You know what I'm saying? So I'm teaching her that. So now I've did 2 things. I've showed her how to make $1 million through investing, and I've taught her how to nurture $1 million with knowledge. Because information is the fertilizer to your wealth, man. That's how we save generations, with knowledge. Pass them all the money you want, man. If you don't pass them no knowledge, you killed them.
Nah, it's a true fact. And it was like, you know, bringing it full circle, you know, bigger than just, like I said, just bigger than just a podcast. When you reached out to me, like, we need to really do something to change the world. I hate the word culture because it just gets watered down so much.
Yeah.
You know what I'm saying?
That's fact.
People don't even have culture. They don't even got culture.
Yeah. It's like,
That's a fact.
that's a fact.
Yeah.
I appreciate you for putting me on that.
But it was like, you know what I'm saying? Let's change the world. And the problem, you know, I never understood, like, until recently. Shout out to MG, the mortgage guy.
Shout out.
He enlightened me on a lot of different things. Like, you can only put so much information in a podcast. It's just a fact. This is why education is still important. I'm not anti-college. Like, people think I'm anti-college because I always talk bad about college. I'm not
talking bad about college, bro?
All the time.
I just feel like a lot of it's just a waste.
Not even college so much, but high school.
Just education, period.
Education. Yeah,
I'm
yeah,
not,
say that.
I'm not anti-college.
Yeah.
I have a college degree, but I just feel that.
Don't let that go over your head.
Yeah, say that again, man.
No, everybody knows I have a college
That's what I'm
degree.
saying. Like,
I didn't know that, bro.
Yeah, he didn't know that.
Yeah, I have a college degree. You know, I went to Hawaii. I played basketball and all
I
that.
forgot you did. I didn't. I thought you was like on some. I just want to play ball and work.
Nah. People got that misconception. Even like today, they was just like, yo, they know that I teach. But I'm like, yeah, Shaggy went to school too. Like, we both had education as a background for us.
Not only did I go to
foundation.
I finished in 3 years.
Bro, I keep telling y'all, listen. I'm not a financial advisor. He can take you to glory, man.
He definitely graduated.
But with Mickey Facts, shout out to Mickey Facts, one of my favorite.
That's shot the bars.
Yeah,
bars. That's hard.
When he came on and he spit the freestyle for us, and he said, "Formal education will get you a portion, but self-education will make you a fortune." And that's my life. Like, if I had to rely on my college degree right now, I'd be in trouble. Just honestly speaking, I'd be in trouble.
Don't let that
go.
So
it's the things that I learned outside of college, including Earn Your Leisure, like just in the last 12, 18 months, like, you know what I'm saying, that has literally changed the trajectory of not only my life, my son's life, and God willing, his children's lives. Like, you know what I'm saying? Like, it literally has changed. Like, you see, it's not a facade. If you follow all of us on Instagram, you see the growth.
Right. That's a fact.
Only through education.
Yeah.
So it's like when you came to me and you was like, yo, bro, let's do something. And we going back and forth. I'm like, let's do a podcast. Yeah, we're going to do a podcast. We're going to do a YouTube live.
That's the easy part.
I think the hard part when people get into podcasts is that you hear information that becomes overload. And some people are going to act on it. But unfortunately, a lot of people, it's just not enough. Like, you kind of need, and that's the good thing about school, is like you need that certain level of like a tutor to like walk you through it. And here's a screen share on the website and show you, and like how to open an account, and like what stock to, like, sometimes you got to hold the person's hand. Unfortunately, 1 hour, even 2 hours is just not enough time to do that. So we're like, how do we do this? So we was going back and forth, and this is the first time ever in Earn Your Leisure history where we actually collaborated with somebody and put together, I don't even want to call it a curriculum. I don't want to call it a program. It's really a manual. We put together a manual for generational wealth called the Family Pack. And it was just like, the idea was just crazy. And it's like, you was like, yo, I need you on it too. Like,
facts.
You know what I'm saying? I need you, like,
need that sauce, bro.
As an advisor, I need you on it. So I'm like, all right. So we talk about dividends. You talk about reach. You give them like 5 growth stocks to pick. mutual funds. I break down a mutual fund play because a lot of times people have the wrong misconceptions about mutual funds, but you can actually make a lot of money on the right mutual funds.
Right. I learned that from you.
Sometimes you don't even have to pay the knock on mutual funds is that you pay a lot of money, but sometimes you don't have to pay that. If you know what you're doing, you get a no load fund and things of that nature. And then
and you broke that down.
Broke down index funds, broke down 529 plans.
I was going to say, don't leave that out. Please don't leave that
529
out.
plans is crazy because it's like, we spoke about 529 plans, but it's like, there's like 30 something states where you can actually get a tax benefit. But then there's like 6 states, but those 30 states, you have to actually live in that state, and the 529 plan has to be in that state. But then there's like 6 states where you can actually invest in anybody's state 529 plan, and you can still get a tax break. So it's just always so many different levels of onions to peel back. And then we went over the trust.
Yes.
And we broke down. It's the first time ever I broke it down, life insurance, and actually like showed somebody like how I look at it as an advisor, like the access that I'm privy to, which is like, you don't have that as a regular person. Like, and I kind of like went through that.
And I broke down the dynasty trust in there.
The dynasty trust.
I keep going. I'm gonna just let y'all keep going so I don't miss nothing. Keep going, bro. Keep going.
It was a whole thing, man. It was like we actually gave the formula and different how to make your child a millionaire.
Guaranteed.
With the investments, and it was like that alone took like a half an hour to actually explain. It's like a whole thing, but it was just something like I said. It's like if we put that like. We would have to literally do 10 podcasts.
And you still might miss something.
Yeah.
A whole season. It'd be a whole season.
Like nobody's really going to sit for 10 podcasts. That'll have to be like his own Wallstreet Trapper Earn Your Leisure show.
Right.
You know what I'm saying? So talk about that.
Don't sleep on that though.
Talk about that. Man. Talk about the family pack.
So for me, the reason why I really came to you with the idea is, this last year, it was a lot of growth for me. And I realized that, like I can talk about a lot of stuff. Because it's as you start learning more knowledge, you start seeking more knowledge, right? And I realized how knowledgeable you were, and we was having dope conversations. So for me, it was like, bro, like we can change something, but we gonna have to walk them through it.
Yeah, that was you was like we gotta have to walk. Cause you like, they still not getting it.
Yeah.
You like, they still not getting it. And like people come up to me,
Same
they
questions.
still don't get it, bro. Like
questions.
we literally have to hold their hands and walk them through this.
And that's okay.
No, it's okay.
And the reason why it's okay, and I see people get frustrated all the time. Like I see people on Instagram saying stuff like, I told you this, why are you doing it? I'm like, you an educator, right? Everybody sit in the class, learn different. You know what I'm saying? So I was like, look, we gotta walk them through it. One is because you don't know what you don't know until you exposed to it, right? I remember my first time cooking up, bro. I burnt it. The water turned brown. I had to call my auntie, and she had to like show me what I was doing, but she played me because she took a lot of, she took the shake out of it. She charged me for it. And she played me. And by the time I got what she left me with, it was just enough to get another package. But because she walked me through it, I ain't need her no more. So it was an L I took, but it was a learning lesson. You feel what I'm saying? So for me, I feel like over the last year, we've made financial literacy, investing in the stock market, and all the great breakdowns that y'all do every Tuesday and every Monday. We've now piqued people's interest. People understand now, especially with this pandemic, they like, I gotta do something else. And they wanna do it. That's the great thing. Right. We've now made it say, because I remember me coming up telling y'all, I'm telling my partners about it, and they like, bro, I'm not doing that, bro, you tripping. Right? And here we are a year later, my partners now like, bro, I just bought some Apple, and people I don't know like, Trap, you changed my life because I bought this. Changed. Right? The conversation changed because we've been beating it. Like we ain't stopping. Market Monday, Trapping Tuesday, podcast. Market Monday, Trapping Tuesday, podcast. We consistent. So now it's like we've piqued the interest, and now people like, all right, I want to do it, but I don't know what to do. All right, cool. That's what this wealth pack is about. Yeah. It's about saying, okay, I made the mistakes for you.
Hopefully
you don't have to go through that. But how I'm gonna make sure you ain't gonna do it? See, if I just tell it to you, you still liable to make the mistakes. Because you trying to replay what I said, and it's going, you ain't really getting it. I can tell you, watch out for that hole, but it's so many other things going on, you still fall in the hole. But now if I grab your hand and say, look, we're gonna step over this hole, and I got your hand, you're like, okay, let me step over the hole. Right? So it was important for me to say, let's shift gears. Let's not just tell them, let's lead them.
Yeah. And what makes it so impressive is that, you know, most times people, you know, they take programs, they take courses, it's really about themselves.
Yep.
But this is about you, but it's about your family. And like, who doesn't want to set up their family, right?
Plug.
You know what I'm saying? Who doesn't want to be the plug to create generational wealth for themselves?
It's the most selfless act you can give.
Yeah.
So, I mean, it's not even no more that we can actually even say about it. I just feel like it's just a really proud thing that we're proud to
That's a fact.
partner with you as our first product that we actually are a part of. That
Blue
I
Magic.
actually, you know, performed on. I feel like an artist. I feel like an artist, man. So,
Produced,
you know,
directed.
that's a fact, man.
It's a dope feature, man.
That's a fact, man. It's purple tape.
This
I'm
is
like,
purple
I'm like
tape.
Ghostface on the purple tape. So, you know,
Don't let Matt here say that. Matt gonna say you the RZA, bro. Don't let Matt hear you say that Ghostface line, because he's capped down. He's said it a million times.
I'm still trying to figure out how he came up with Cap.
I don't even know, man.
That's another story.
That's a whole nother podcast.
So being that, you know, it's the holiday season, right? And we in the Black Friday vibe. We're not even gonna wait till everybody dropping their situation on Black Friday. We literally gonna drop this right now. And you know, you was like, you know what? Trappers, earners, united. This is
Family.
united front.
Families.
So we was gonna do 50% off, right?
Nope.
50% off the
Can't
rip.
do it.
But you're like, you know what? Let's just do something like a little even crazier. Let's do 75% off for the first 200 people
Yep.
out of the love. And then after that, it can go to 50%. So the first 200 people that are interested in investing in themselves, guaranteeing that their child becomes a millionaire and just building generational
Say that
wealth.
again, though. Guaranteed.
Yeah,
You
you
kinda glossed
guaranteed.
over
That's a
it.
fact. Now we gonna stamp that.
Yeah.
Stamp that, yo. Nobody in the game. Nobody.
No, it's
Nobody.
I ain't seen it.
never been done
I
this
ain't
way
seen
by
Everybody play
nobody.
the safe route.
Yeah.
Never
Nothing is guaranteed.
Yeah.
People give you like this is literally this ain't for the lazy investor.
Nah.
This is for the diligent person that's willing to really make the sacrifices to learn. Because it's gonna be there. You just gotta actually learn.
There's no hows in it. It's like there's no like, hey, how do I do it?
Nah, it's everything, man.
It took the we literally took the guesswork out of it.
Yeah.
Yeah. So the first 200 people, first come, first serve. So please don't email. It's nothing we can do once it's gone. It is what it is. The first 200 people will get 75% off. 75% off. And that's dropping right now, literally on Tuesday. And we're going to run it as long as it lasts. Then after that, it'll probably go 50% off.
Yeah.
So you'll still get a discount. Just, just slightly it'll still be love. I mean, at 50% off, it's still love.
Yeah.
So where can they find that, Trap? I know it'll be on our website, earnyourleisure.com. We'll have it on the alumni tab. We'll have it on the red tab on the front. You just go there, but they can also click the link in your bio, I believe, too, right?
Yeah. So I'm gonna set it up. My trap house like the Carter, man. I already know, man. So yeah, we gonna have it on my link too. I'm gonna put it up there, man. I ain't even gonna lie, man. Like, I feel like this is like some of my best work. Cause I learned so much. You know what I'm saying? And for me, I'm a learning machine, but I'm not just a learner. Like, I'm the person who go head first and figure it out. I won't get burnt. I won't, you know what I'm saying? It's kind of like I won't make the mistakes so I can learn from it. Cause when I don't make no mistakes, I'm missing something.
I go through it so you won't do it
Yeah,
after
you know
me.
what I'm saying? So I feel like, it was great for all of us to get together because I know for sure that it wasn't about how much money we can make. I know for sure it was about, bro, the culture the world need us.
Yeah.
Our people need us. You know what I'm saying? So who else they relating to better than Wallstreet Trapper, Earn Your Leisure?
Troy, what's the website?
Yeah, so it's trappingwitheyl.com. That's TRAPPIN with. I gotta get you in there with EYL.com. You know how we play this. Don't wait, don't hesitate, man. 200 people, get over there.
So you can click the link in our bio, you can click the link in Trapper's bio, or you can go to the website direct. Trap, always a pleasure, my brother. What would you like to tell the people before you head out?
Man, listen, so the most important thing for us to do is, man, solidify the generations behind us. We do that by educating ourselves now. If we don't educate ourselves, we can't save nobody, right? So I think it's important that we put the next generation in play because ain't nobody gonna save us, man. It's something I always say, man, if you allow them to feed you, you give them permission to starve you. And with this right here, you ain't giving nobody permission to starve your family.
That's a fact. Troy, housekeeping items?
Yeah, shout out to everybody on patreon.com. Y'all know that's our Proud to Pay program. Obviously, the top tier level 5, y'all get access to EYL University, the #1 school for business, finance, and entrepreneurism in the world. So shout out to all the earners that's part of that. And shout out to everybody that has been supporting the brand new merch. It's off to a great start. We still running a discount on that. So go ahead and get your stuff, earners. Go grab the items that is exclusively to you, and shout out to our collaborations, man. That tie-dye joint went crazy.
That was crazy.
I'm still waiting on mine.
I feel some kind of way. I ain't even
Yeah,
gonna lie.
shout out to the merch team too, man. Shout out to Bam, shout out to Smitty, out in Atlanta. Shout out to Mike.
Yeah, so don't forget, man, 50% off all merch too. So hit the merch store, and we extended the 50% EYL code as well. EYL 50 for both the merch and EYL University as well. So make sure you tap in with that. Good day, good people, or good night, wherever you are in the world. It's been a pleasure as always, and thank you guys for rocking with us. We'll see you next week.
Big trap.
Peace.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.